we are looking at an alcohol company which is launching the public issue. Alok Gupta, Managing Director at Allied Blenders and Distillers, now joining us, along with the Ramakrishnan Ramaswamy, the CFO of Allied Blenders. Let's start by the discussion. Alok, let me come to you. Could you briefly explain the business model? Can you elaborate on how the proceeds from this issue will be used, apart from, of course, repaying and reduction of the debt?
Thank you very much. ABD has been in the alcohol business since 1988, and over the last 35 years, we have built a pan-India manufacturing, distribution and sales network. We have a number of brands that are in global ranking. We have over 4 million brands. And looking forward, the idea is to take advantage of the tailwind of premiumization. As regards the IPO is concerned, the proceeds of the IPO will go towards retiring our current debt.
Mr. Ramakrishnan, the 500 crore OFS portion, what are the reasons for that the promoters are looking to reduce their stake in this company? Will they be infusing money in the company in some other form going forward?
No, the OFS is for the promoter, and on the balance after dilution currently, whatever is the balance, then there is a window wherein we will have to get to around 25% levels. So we have time for that on a future date, or the promoters have time for that on a future date.
Whiskey currently contributes 96% of your sales. Going forward, do you want to continue focus on whiskey, or would you also want to increase the contribution of other products and diversify your overall basket?
Absolutely. Whiskey, as you know, 65% of total alcohol sales is in the whiskey segment, and for us it's 97%. So we have a very, very significant share of the whiskey market, and going forward we are looking at segments both in P&A, premium and luxury segment, which are non-whiskey, and the new product development that is currently underway will address some of these need areas.
What is the revenue growth rate you're targeting for FY25? Do you have seen increase in your EBITDA margins as well to now 7%? Are you expecting some more improvement going forward?
For now, I'll be unable to give you the numbers, but I can certainly share directionally. So we are looking at double-digit growths. We are looking at significant expansion in our gross margin with focus on P&A on the premium side. Our internal outlook is to get to industry parity EBITDA over the next few years.
Right. Alok, you currently have a market share about 8% in the IMFL space. What is the outlook next 2-3 years? Do you plan to capture higher market share?
Well, our focus will continue to be on more profitable markets rather than at a generic level, at a national level. The outlook would be to look at markets which have got better gross margin return and better return on capital deployed, and we'll stay focused on picking up market shares in those markets. So that really is the sharp focus over the next immediate outlook, future outlook.
Currently, a large part of your sales actually is coming from Telangana and UP. Are you expecting to maintain this revenue mix going forward, or planning to go to other states as well?
Both the markets are important for us. In addition, we are looking at the markets of West Bengal, the market of Maharashtra, the market of Rajasthan, the market of Andhra Pradesh, to also, in the right segment, which are profitable, to consolidate and expand our market shares. Okay.
Your export sales, let's come over there, Alok. It is currently 5 to 6%. Now we are seeing the acceptance of Indian whiskey globally is increasing. Are you also aiming at raising your exports, and which are the geographies, if yes, do you find lucrative?
So we are the largest exporters out of India. Our larger revenue comes from GCC. Going forward, Africa would be a continent that will be an area of focus.
All right, we'll let you go on that one. Thanks so much, gentlemen, for joining us, and good luck for your issue. Also, before you take a break,
if you like this video, then like, share and subscribe to ET Now.